All right, guys, welcome back to another episode of the Black Bullion Show. This gold rally could take prices as high as $3,000 an ounce. Now, this comes from Edison, uh, who wrote an article for Kitco News. And uh, you know they bring up some pretty interesting points, and I'll share them shortly, but I also have a little bit of a counter to what they talk about. So if you're new to this channel, please hit the big red subscribe button right down below. Also, please hit the like button. It helps to get this economic evangelism out there to the masses, bringing more people into precious metals. Okay, so Edison uh, pretty much sees uh, gold prices rising to $1,892 an ounce, and potentially as high as $3,000 an ounce. Why? Pretty much because of this, particularly real interest rates. And I quote, interest rates echo 1979. While the total US monetary base has expanded 58% in 8 months, real interest rates remain solidly negative. That may change. However, there is potential for some material volatility, including the possibility that the consumer price index could go negative or very much more positive in short order. In this respect, there may be a historical precedent in that there was similar volatility in both inflation and interest rates between September 1979 and October 1980, and gold's first great bull run in the period of fiat money. Then, a large part of the reason for the volatility in inflation was the oil price and Middle Eastern politics. Today, it is a potent combination of money printing, bond buying, national lockdowns, and economic crisis. Nevertheless, it is worth observing that in the previous case, gold did not top out until real interest rates were over 4% for a sustainable period of time. Now, I agree partially with this, but I think they're leaving out the fact that Paul Volcker raised nominal interest rates to pretty much an ungodly percentage in order to achieve that positive 4+% real interest rate that they mentioned. Here's actually a graph of what they're referring to. So these are the real interest rates, and it was roughly around or a little bit over 4%, and then it just got a little bit higher and just kind of like I guess hovered over there for some time. But yeah, if it wasn't for Paul Volcker essentially raising rates to an unprecedented 20%, we might not have had that happen. The end of the gold bull run, there was some manipulation that was happening. If it weren't for that rate hike, inflation would have overtaken the nominal rates. Continuing to keep real interest rates in a weak territory and maybe even some negative territory. Now, take that thought and imagine our current economy, our low growth economy, our monetary methadoned up economy, even trying to do something similar to that, to take care of runaway inflation. We can't even run a day without having easy money. I mean, hell, the repo market gets billions of dollars every night in order to keep our banking system afloat. Now, remember, remember, you know, the repo madness that was happening. This is pretty much how high repo rates got before everyone on Wall Street got a heart attack. It was roughly around 9% before people just screamed bloody murder. Uh, and remember that repo rates are always a bit higher than the Fed funds rate. So Volcker hiked the Fed funds rate to 20%. Now imagine if we did that. Do you think the repo market could handle That, when they almost had a conniption at around 9%. This is all to say that if we have runaway inflation and try something like what Volcker did in 1981, we may have some problems, to put things lightly. All that to say, I'm hoping more and more prodigal sons come back, see the light, and come to gold, because I just see this roller coaster, getting rockier and rockier and catching people off guard in the future. What do you guys think? Let me know in the comment section below. Thanks again for watching. Please hit the like button. Please subscribe. It's Black Bullion.